Thank you for tuning in to ESG Talks, a KBRA podcast series focusing on environmental, social, and governance, ESG. This podcast series highlights various ESG hot topics and includes commentary from prominent voices within the ESG community. In this episode of ESG Talks, Joan Feldbaum-Vidra, Senior Managing Director and Head of KBRA's Sovereigns Rating Team, interviews Mike Spence. Mike is an internationally recognized economist focused on economic growth and development, dynamic competition, and the economics of information. In 2001, he was awarded the Nobel Prize in Economic Sciences for his tremendous contributions to the analysis of markets with asymmetrical information, and of course, the field of economics in general. Joan and Mike discuss the economics of the energy transition and the implications for global economic growth.
Thank you so much, Mike, for joining the KBRA podcast. So let me just jump in with the first question. To start, I want to give our listeners a bit of context around the topic that we'll be discussing today, which is energy transition. Mike, you've spoken and written a lot about a few major economic transformations that are happening today in tandem with climate mitigation and the energy transition. At a broad level, what are these transformations and how are they influencing the trajectory and pace of the energy transition?
So I think there's three major scientific and technological revolutions that are impacting the economy. And without elaborating, they are a multidimensional digital transformation, that pieces of which I think almost everybody has seen, but it's not anywhere near complete. The energy transition, which is the main subject that we're going to focus on today, that's also multidimensional, and its purpose is obviously creating sustainable patterns of growth and economic activity in the world. We're a long way from being where we need to be in that particular area. And the third one that I think is getting a lot of attention from investors and others is a kind of biomedical revolution. And these things overlap. I mean, I think there's lots of aspects of the energy transition that are going to benefit from various aspects of the digital technologies in order to move the ball down the field, whether it's controlling the operating systems in dwellings so that they're more energy efficient or managing smart grids. There's lots of examples. And similarly, on the biomedical side, we have sustainability in agriculture, including especially when we have, a shifting climate, which we do have. And so people think biomedical probably has something to do with my health, but it has a great deal to do with sort of agricultural technologies and products, resilience, ability to function in extreme climates, and so on. So those are the major three. I think there'll be a fourth sometime down the road that has to do with synthetic biology, which means essentially building things with biological processes and related aspects of material science. But I don't think they're now in the world of science right now, mostly. And the last one, Joan, I'll mention is that, this is a multi-decade process, but we're well along in it. The global economy is shifting in terms of mass to the emerging economies and specifically toward Asia. So where economic power and influence lies, where growth comes from, a whole lot of things are affected by that.
Really fascinating and a lot to think about for sure. Could you touch on how the path of carbon emissions reductions will differ for developing versus developed countries?
Absolutely. So if you look at the kind of global situation, we're emitting somewhere between 35 and 40 billion tons a year. We were within shooting distance of something that's, I'll call safe, for want of a better word. By that, I mean broadly consistent with somewhere between 1.5 and 2 degrees Celsius increases. We would be more like 14 billion tons. So we're, somewhere in the neighborhood of 3 times where we need to be. If you then break that down, you can look at it, Joan, from the point of view of per capita emissions, or you can look at it from the sort of dynamic trajectory. So in North America, Canada and the United States specifically, the per capita emissions are high, but they're coming down. So we've peaked. Peaked meaning, we've stopped increasing. Europe per capita emissions are probably in the area of 6 tons per person, and we've peaked in Europe. So the developed world has essentially peaked and we're coming down. China has not yet peaked, but there is a reasonable chance. Lots of experts agree on this. This is, by the way, hugely important because China's emissions per year aggregate, not per capita, are on the order of 9.5 billion. So they're roughly twice anybody else. And the economy is still huge and growing. But they have been pretty aggressive about it, and the expectation is that they will peak by 2030. So that's a hugely important development, and it's positive. On the other hand, if you look at other developing countries, let's take probably the biggest one coming along, which is India. India's per capita emissions are low, but there's just a huge amount of growth in their future unless something goes badly wrong. And so I don't think you can reasonably expect, Indian emissions overall to peak in the near future. So the broad picture is the developed countries have peaked. The highest middle income countries are probably going to peak in the next decade. And the rest, meaning the ones that have the highest growth potential, regardless of whether it's realized or not, are further down the road. The final way to think about it is, let's suppose, things are looking pretty gloomy in the global economy now. The current forecasts for growth are something around 2%, which we haven't seen in a long, long time. But let's say the global economy goes at 3.5%. If you want, carbon emissions to come down fast enough, then the carbon intensity of global economy has to come down at, something like 7 or 8% a year, which is just huge. So that's the mountain that we're all, in one way or another, trying to climb.
Well, that leads well into how the energy transition is to be funded. The big question. How important will international financing be in the low carbon transition? And with sovereign debt levels elevated and fiscal space narrowed across the globe, will financing be constrained, or what are your expectations for how this might evolve?
So this is an absolutely crucial question, and I'm glad you asked it. So the short answer is that in order to accomplish the energy transition, there's a massive amount of investment that has to occur, and it can't all be in the developed countries. We're just not a big enough part of the problem. We're not trivial, but we're not big enough. The estimates are, on an incremental basis, something like $3.5 trillion a year. That sounds like a huge number, and it is. But on the other hand, this is a global economy that's on the order of, 70 to 80 trillion. So it's not ridiculously large. It's a challenge. But if we were, living in a hypothetical world where we all took this seriously and we all had relatively high incomes and lots of fiscal space, this is manageable. But that's not the world we live in. We live in a world in which probably the developed countries, assuming the political and policy making will is there, we can get our part of the job done, but that's not true in the developing countries. So, and here again, we see this differentiation. Does China have the fiscal space and resources to accomplish their kind of net zero transition, which they have targeted for 2060, I believe, which is, I think, hopefully they'll increase that ambition as time goes on. Yes, they do. And a number of other countries do. But there's an awful lot of people who live in countries that don't have those resources, and those resources shrank in the pandemic because the economies were hit hard and they used their fiscal resources to try to buffer the shock of the pandemic. And there's nothing even remotely close to enough there. So we need a kind of fundamental change in direction. The developed countries have committed $100 billion to investment in the energy transition in the developing world broadly. Very little of it, maybe 10 to 15 billion has actually flowed into these countries. So that's just, that just simply has to go up. My best guess is that means strengthening the international financial institutions and increasing their balance sheets, which takes commitment from the major countries and economies of the world. And then it takes lots of hard work. There's country-specific risks that have to be reduced to enable the private capital flows to flow in there and achieve reasonable rates of return. So the bottom line is there's two things we need to flow internationally in order to get this job done. One is capital, and the other one is technology. And on the technology side, we really need it to flow with minimal frictions and freely, meaning it doesn't cost a lot to access it. And we're not really succeeding on those dimensions right at the moment. So one can hope for a change, but you can, if you look at the performance of Europe, you might get lulled into some kind of sense of optimism about how we're doing on the climate change. But most of the growth, most of the opportunities to build, clean energy and energy efficient buildings and all kinds of other things are going to come in the developing countries. And I think there isn't yet enough attention focused on all the things that have to happen to make that part of the solution actually come to pass.
Quite sobering. And on to the role of carbon pricing and trading schemes. Do you see carbon pricing and carbon trading schemes as an important piece of the global energy transition?
I do. I mean, I think for a while, economists, and of whom I'm a member of this club, probably overemphasized this and underemphasized the importance of, all kinds of other things like engagement by corporations and multiple other entities, even citizens. But it's an important piece of the puzzle, because if you don't price carbon, then basically you don't have a level playing field with respect to alternative greener technologies. You don't have a level playing field with respect to anything that moves the ball down the field, because you're essentially mispricing the output. So yeah, I think one way or another, if you want to get the incentives right, then both for individuals and for companies and for investors, somehow you have to have something that's vaguely like carbon pricing. There are regulatory equivalents to it, and there are arguments in various sectors for using them. So the automobile industry is not primarily regulated with respect to emissions by using pricing. They're given essentially targets with respect to fuel efficiency in the fleet of cars that they sell, at various points of time, with the efficiency increasing over time. And that's a perfectly legitimate way to tackle a problem. So and we won't go into this, but there are times when quantities versus prices is a better way to approach the achievement of the objectives. But broadly, carbon pricing is important. Now, here's the problem. It's politically very sensitive and extremely difficult to do. And there's lots of examples of that. One of the more recent ones was the Yellow Jackets. They had a tiny increase in the tax on gasoline in France, and it triggered a kind of huge response that wasn't really only about that little tax increase. Now we have very high energy prices again. And so in a sense, that acts like a tax on fossil fuels. And if it lasts, it may diminish the short run importance or short to medium run importance of introducing incremental taxes, because high costs of fossil fuels in effect creates the same incentive effect. So people who are asking themselves the question, is this particular set of shocks to the global economy going to derail the energy transition? I think the answer is, it may make it a little more difficult, but in this dimension, it's probably a positive rather than a negative. Joan, I want to say one other thing. Here in Europe, prices of gas, and we're very dependent on Russian gas, have gone up so much that governments are understandably trying to buffer the shock. And the way they're doing that is they're absorbing some of the cost increase so that the customers don't pay it all. And that's understandable, but it's half a solution. So let me explain what I mean. A number of people, including me, have been saying this for some time. There's a perfectly reasonable argument for managing energy prices, for reducing the volatility, right? So when the price, and it is volatile over time, these prices. So if you get, a big spike, you want to maybe put a lid on it to protect the economy and people. But on the other hand, when prices drop like a stone, you want to put a floor on it, because you don't want to put the people who are investing in green technologies out of business or increase their risk, So you're investing in a green technology that's competitive at $30 a barrel of oil, for example. When it drops to 10 or 15, that's not a good thing from the point of view of investment risk. So I'm not against, buffering the shock, but you've got to do it on both the high side and the low side. And the problem is we tend to do it on the high side. We tend to ignore it when the price is down and then just think it's a party for however long it lasts. And that's just not good long-range economic strategy when it comes to sustainability in the energy transition. Now, whether we're going to change direction on this, I don't know. Governments are part of the problem, because, a fair amount of the price of fossil fuels in most parts of the world are essentially taxes. The taxes are
on a percentage basis. When you get an increase in the price of oil, government revenues go up. So even their incentives, to sort of go in and say, well, actually, we're not going to let this happen, are at least questionable. So I think this has been over several decades and probably into the future, a kind of missed opportunity to improve the investment climate for all the investments that we need to make the energy transition.
Truly fascinating. And thank you for those very insightful points about how challenging the current environment is and the management of this. Mike, could you spend some time on one other question? This question is, what are the implications of the energy transition on income inequality and distribution? And in your mind, is there a trade-off between growth and emissions reductions?
Let me take the second part first, because it's not a distributional question, at least not primarily a distributional question. I think realistically, you have to admit that the energy transition, as it's emerging in detail, has the potential to slow down growth in the short term. And I underline in the short term. When anybody who pays attention to this, of course, Joan understands that, one of the reasons we're making these investments and the urgency is now perceived to be so high is we want to prevent a catastrophic outcome down the road, which is longer time horizon. But that catastrophic outcome isn't just environmental, it's economic. We could have a kind of major collapse of the food supply, of, food security, of functioning. I mean, we could, I suppose we could try living outside the planetary boundaries, but at some point, something's going to break. So short answer is probably negative growth in the short run and positive in the longer term because of the sustainability. I don't think the negative effect is particularly large if managed properly, but that's, it's very difficult to prove with data. So we're going to have to live through that. And we'll see, how right that is. One element of the energy transition is related to this pattern of diversification that we're seeing in the global economy. And the kind of most visible version of that is the diversification away from dependence on Russian fossil fuels that's going to go on in Europe. And that will be expensive in the short run and will slow growth. So it's an example of what we're talking about. On the other hand, it'll lead probably to a more rapid expansion than would otherwise have occurred in the green technologies. So we'll see solar and wind expand more quickly. We might see some nuclear expansion. And a lot of these things have the characteristic that they'll accelerate the energy transition and also make you more energy secure or energy independent, right? Because you don't have to import wind and sun, and you don't have to import too much in order to run the nuclear power. And there are other technologies, maybe we'll have low carbon hydrogen at some point. I mean, there are companies and scientists who are working on this now. But anyway, I mean, the diversification process is not necessarily a negative and could easily be, even though it's relatively expensive in the short run, could be a positive for the energy transition.
Good to hear. I like the rays of optimism. My last question. As part of our Economist series on ESG Talks, I do have one final question, Mike, and that we're asking all of our participants. When it comes to climate mitigation and the energy transition, what gives you the most hope and what keeps you awake at night?
The most hope comes from I guess I'd call it engagement. My friend John Brown, Lord Brown of Mattingly, at the time he was still the head of CEO of British Petroleum, gave a speech 25 years ago in which he basically said, we have to take this seriously. And he was attacked by virtually the entire rest of the industry he was in and otherwise sort of ignored. If you fast forward to today, I mean, I use this just as an example. I mean, it's very hard. You can still have climate deniers, but the momentum is very real. The engagement globally is real. 25 years ago, when in a developing country, if you said climate change, they wouldn't know what you were talking about. Now, nobody doesn't know what you're talking about. And I think engagement and kind of commitment of the type that you see in all of your clients and people you deal with is a kind of prerequisite for getting anything done. It's not sufficient, but it's certainly necessary. So that makes me optimistic. Pessimism, I think there's two sources of it. One is just a massive challenge when you look at the aggregate numbers and how fast things have to change in order to achieve the objective of limiting real damage from climate change. We talked about it before, so I don't have to repeat the numbers. But I mean, so I don't have any doubt that we'll make significant progress, and we are making significant progress. But, the pessimism comes from when you come around to asking yourself, can we really do this fast enough? Or have we left it so late that in order to achieve this level of engagement, that it's really a nearly impossible task? I hope not, but it's a much bigger challenge than it would have been, if we'd been at this for 20 years already. in a serious way. And the second one we've already touched on that makes me pessimistic is, we're living in a world where the international institutions are floundering. They're losing their support. UN, IMF, World Bank, WTO, World Health Organization. If we were living in a world in which there was strong commitment to these international institutions and what they do, and lots of financial backing, then I would be more optimistic. But in the world that we're actually living in, where these entities are struggling to find their footing in a world that's changing pretty fast, I wonder whether this rather large flow of technology and financing that's needed all over the world is actually going to get done. And so probably that last one is the one that worries me most. And I think it worries me perhaps more than other people, because I'm, by virtue of what I do, I can see that's where the growth is going to occur. So if that is growth without a major component of the energy transition built in, then it's very hard to see how you could solve this problem at all.
Thank you to Mike and Joan for a very interesting discussion. Please email esg@kbra.com with any questions or comments. We also encourage you to visit KBRA's ESG website at esg.kbra.com, where you can find ESG research related to the topics discussed in this episode, further details on KBRA's ESG approach, and other ESG-related media items. You can also join our mailing list to access our ESG weekly roundup newsletter. This concludes our episode. New episodes of ESG Talks air every other week. In the meantime, please visit kbra.com to access our other podcast series, as well as our ratings and research.